So after 9 up weeks in a row, the gold price finally hit the Fibonacci extension golden ratio, 0.618. Personally, I think it's likely we see the price go down to the 4,100 level or even the 3,800 level. However, do I think that the price will crash down from here like many people predict and compare it to the 1979 run? I definitely don't think so. And here's the reason, right? So the difference from 2025 and 1979 is mainly because of the money supply ratio. So if you compare the gold price divided the money supply ratio, which is the basically the money, the US dollars in circulation that have been printed by the US Fed, you will see that the ratio is much lower this 2025 compared to 1999, right? So even that the price very high compared to the 1979 levels, you have to also take into account that we have printed so much more money, right? So if you look at the US M2 supply, which is a metric to look how much money uh, we have in the system, you can see that we are nowhere near close. So the chart from before was April 2025. This one, the updated one now you can see here is the gold divided by the US M2 supply. We are nowhere near close to the 1979 levels. So definitely we just catch up with the 2012-11 level. And if you think that this is the top, like you can make a point here, but there's definitely much room to run from the historical perspective, right? If you compare to this run up, there's definitely the potential to go much higher without a pull. And it's the same argument for the S&P 500, right? So many people think we are to the 2000.com bubble levels, but if you actually divided that by the M2 supply, money supply, it's actually better if you divide it by the global supply, because nowadays Chinese printing, like money printing, Europe, the G7 in general also contribute a big chunk compared to 1979, right? Where basically the US have global power there. So if you compare, if you take into account the global money supply, dividing the S&P 500, the global money supply, you can see that we are definitely like at least we have a 30% more room to run up. We can definitely run like up to 30% before we get to the dot-com level, dot-com bubble levels, and that's not that even assuming that we are not printing more money, right? That the global money supply doesn't increase, because if that increases, we have even more run up in S&P to run. So that's pretty much what I think. Price is definitely seeing high, but if you take into account how much money printing have there been, you can see that there's not much we can do. Like the value investing methods are not as good as before, because the inflation is just running levels that we had never seen. So you can see that Warren Buffett is struggling to find good opportunities, because it's just time has changed and you have to expect new earnings, like inflation adjusted earnings on the company, so you get like a different way to evaluate the company ratios and stuff. So that's pretty much it. Bitcoin, on the other hand, we could definitely have a breakdown if the S&P breaks here, because it's kind of it looks kind of dangerous. Like we can definitely go down. As you can see, like there's a channel. Well, it breaks down, and we are going back to the level again. Then we could potentially have like a major down movement, like 20%. Definitely see like a down movement to 20%, but after that, do we think that we are going to crash? Not really, as long as they keep printing money, right? If the S&P 500 goes 20% down, we can definitely see Bitcoin going like at least to this level around 60,000-70,000. But below that, it's really unlikely I will be buying here, if definitely now, because like the Bitcoin market cap is just so small. It's 2.13 trillion right now at the 106. So if it goes down to 60,000 or 70,000, we are basically going back to 1.2 trillion, which is so little compare like the gold market cap, the gold market cap just reached 30 trillions the other day. If you consider that, like it's been like the last week the gold market has been adding 1 or 2 trillions a week. So if you think that Bitcoin can go lower than this, I really doubt so. Eventually we could have like a bear market for the next year, half year, 6 months of month, but I definitely see like the 60 to 70,000 zones be a really good buying zone if we ever reach there, right? We don't, we could be, yeah, 80,000, but we have to see. In the long term, like definitely, I would say hold at least 20% in gold. That's what I see, because at least from this point of view, from this point, from this point now, we still have like much upward potential. If we were at these levels, levels of 1979, I would definitely say rebalance your portfolio. For me right now, I think the S&P 500 is overvalued. So what I would recommend if I had to is something like 40% gold, 20% Bitcoin, like always half, maximum half of your gold size, and then probably I would put 20% in S&P 500 and 20% like that. It's really, it's not it wouldn't surprise me if the S&P 500 goes down, but it will eventually go up as always, because we have been printing like crazy. And that's pretty much it. Tell me what you think about the stock market, and yeah, let me know in the comments if you agree or disagree. So if you disagree, why do you think, what do you think is it's gonna happen, and why do you think? Thank you for watching, and see you next time.